Hey guys, welcome back to another video. In today's video, we're going to talk about Meta's first quarter 2022 earnings report. Their stock actually surged about 18% after the company beat profit expectations for the first quarter of 2022. But overall, the stock is still down close to about 40% since the start of 2022. And just like other stocks, this is all coming as a result of the Ukraine war, rising inflation, and the return of lockdown measures in China that are seriously disrupting a lot of supply chain issues happening globally, especially for tech companies like Apple, for example. And this report is coming from their recent report for the fourth quarter of 2021 that they came out with in February, where they basically announced that for the first time, their daily active users decreased pretty much for the first time in the entire operating history of their business. And so as a result, the stock ended up crashing about 35% in a single day. And so analysts and investors were looking for some optimistic news for Meta Platforms in the earliest report, which is for the first quarter of 2022. And right here we have their first quarter 2022 results. And if I scroll down a little bit here, we can see this is their financial highlights for 2022. And we can see that the total revenue year over year from the 3 months ended March 31st, 2021 to 2022 only increased about 7%, which is actually a very interesting statistic because it's the first time since the company went public 10 years ago in May 2012, where their sales only grew by single digits. So there's definitely been a slowdown in growth for Meta Platforms since they've gone public in May of 2012. And if I scroll down here, we can see a couple more social media statistics. The key one right here that they really pointed out was their daily active users, which increased about 4% year over year. It increased to 1.96 billion on average for March 2022, which was up from 1.93 billion from the last quarter, or for year over year, actually 4% year over year. And if I scroll down a little bit here to page 5, we can see their first financial statement, which is their income statement. And there were a couple of interesting metrics that came from this. One, which I already mentioned, which was the slowdown in growth to single-digit growth for their revenue. But also their earnings per share came out to be about $2.72 per share, which beat the expected earnings per share of about $2.56. And so obviously, analysts and investors were very happy about that, and that was one of the reasons why the stock price spiked up like that when they announced their earnings. Also, the revenue coming in at 27.91 billion, just about, that was not only single-digit growth, so it not only didn't beat the expectations for growth, but it also didn't beat expectations for the actual revenue dollar amount. Analysts were looking to see a lot more revenue for the first quarter of 2022. And besides that, we can see their net income came out to be about $7.4 billion over their total revenue of about $27 billion. If I scroll down a little bit here, we can see for their balance sheet that their total assets have actually decreased from the last quarter ending December 31st, 2021, from about $165 billion of total assets to $164 billion. And that primarily came as a result of a decrease in cash and cash equivalents as well as marketable securities, which isn't really to be that much of a shocker considering that yesterday on Friday, the stock market had like a pretty insane red day. So a lot of marketable securities are definitely decreasing in value. So this metric definitely does make sense for the first quarter of 2022. Also, we can see that for their total liabilities, it also decreased from about 41 billion to 40 billion. And based on this ratio right here for their balance sheet, we can see that most of their business is financed by equity. As we can see right here, $123 billion of equity, down from $124 billion of equity. So that could potentially be a good thing because it means that they're going to be able to meet their short-term and long-term debt obligations a lot easier because their business isn't so heavily financed by debt and loans. And they're also going to have more free cash flow to invest into the business because they aren't going to be paying so much money on interest payments and finance leases and things like that other businesses, like their competitors, for example, might have to deal with. And then lastly, we have the statement of cash flows that I will go into, actually the second to last financial statement that I'll go into before finishing off the video with the discounted cash flow analysis. And we can see right here that the net cash provided by operating activities was about $14 billion for the first quarter of 2022, which year over year is up from $12.2 billion for the first quarter of 2021. We can also see that they invested pretty heavily in purchases of property and equipment, CapEx, at about $5.4 billion used in those investing activities. And then one really cool statistic right here for the cash flows from financing activities that investors are obviously going to love is the repurchases of Class A common stock, a pretty massive number here, $9.5 billion of share repurchases in the first quarter of 2022, which is up from $3.9 billion 1 year ago. And so that made up the majority of their financing activities. We can see that was $9.5 billion of their $10.6 total billion worth of financing activities. And so the net change in cash and cash equivalents was a decrease of about $1.5 billion from $16.8 billion at the beginning of the period to $15.35 billion at the end of the period. And then lastly, I wanted to go into this financial statement right here, the segment results. Obviously, operating segment, for those watching this video who might not recall, is basically when a segment of a business makes up at least 10% of the business's revenues. And we can see right here that Meta Platforms breaks up their business into two segments, which is Family of Apps and Reality Labs. Family of Apps is the common stuff that we associate with Meta Platforms like Facebook, Instagram, Messenger, and those other apps like WhatsApp. And then Reality Labs is what they've been spending a lot of money on recently, heavily investing into, which are things like augmented and virtual reality, consumer hardware, software content. That's where all of their investments for the metaverse are going into. And so right here for segment information, we can see that the vast majority of their revenues came from advertising revenues. Of their total $27.9 billion of revenue, $26.9 billion of that came from advertising. So obviously Facebook is still their main driver for their revenues for their business, but they have been investing pretty heavily in Reality Labs. We can see that from the last year, first quarter of 2021 to the first quarter of 2022, the revenue has increased from about $530 million to almost $700 million for Reality Labs. But we can also see that they're burning a lot of capital investing into Reality Labs because this segment of their business is not yet profitable. And so they're really relying on the profit margins from their Family of Apps business segment to carry their business forward. And lastly, what I wanted to do is end the video off with a discounted cash flow analysis so we can figure out what a good buying price would be to buy into Meta Platforms from a value investing perspective. And so I took some of these growth rates from Yahoo Finance. We can see that analysts on Yahoo Finance expect that for the next 5 years, the growth rate for Meta will be about 3.95%. And so for the next 5 years after that, I was just conservative and I cut that value in half. And we can see that the intrinsic value per share comes out to be about $217 per share, with a 30% margin of safety of $152 and a 50% margin of safety of $108 per share. And so compared to their current share price, we can see that they're currently trading still below the intrinsic value per share, as we can see right here, of $217 per share. Before this little run up in the stock price that they experienced last week, they were trading closer to a 30% margin of safety when they were trading at about $172 per share. So that might have been a good time to buy into the stock. But also, I mean, depending on the future results for Meta Platforms, considering the fact that they're investing so heavily into the metaverse, and then they're also experiencing increased competition with TikTok and other social media platforms that are up and coming, then, I mean, depending on the results for their second quarter of 2022, share price might honestly sink lower than this. So that's the call of every investor that they're going to have to make. Could be an opportunity cost not buying it right now, or there might be an even better price to buy in the future. And then right here, lastly, I want to finish off the video with a competitor analysis. We can actually see that this right here, obviously FB stands for Facebook, now called Meta Platforms. They are actually beating out their competitors like Twitter and Alphabet, parent company for Google and YouTube, by pretty substantial margins. We can see that the gross profit margin for Meta platforms was 80.79%, which is beating Twitter by a little bit, about 16%. And then it's also beating Alphabet even more than that by about, what is that, 24%. So pretty good. And then also we know Twitter is not yet profitable, so they don't really have net profit margin or return on assets because they don't really have a return right now. But in comparison for Meta platforms and Alphabet, we can see that the net profit margin for Meta is definitely bigger than Alphabet's, and the return on assets is bigger. So they're more efficient with their utilization of their assets to try to get a return on their business. So compared to their competitors, I mean, it's looking like Meta is beating them out from a fundamental perspective. It's just their stock price that has taken a pretty heavy hit. So that could mean that Meta is currently sitting at some sort of a buying opportunity. But I would definitely love to know what everyone watching this video thinks. Is Meta Platforms a buying opportunity right now at the current share price? And is anyone going to be investing in Meta Platforms in the near future? Definitely let me know. Subscribe to the channel, leave a like on this video, and I'll see everyone in the next one.